Good morning. This is Axel Merk, President and Chief Investment Officer of Merk Investments. As I have done now of late, I'm not going to give you a full market rundown, just going to focus on a topic or two. I'll be talking about the EU deal that was achieved, and then I'll talk a little bit about Judy Sheldon as well, and maybe I rant off on something else as well. But those are the two things to focus on today. So after about 4 days, the EU leaders have come up with a 750 billion euro or so deal. And the key thing here was that obviously every one of these leaders has to their own constituents, defend it. The big news here is that for the first time, joint EU debt will be issued, and the importance of this cannot be understated. Just imagine the U.S. federal government not having the ability to issue U.S. treasuries. That's kind of where the EU has been, and it's not as if now that's going to be a given necessarily, but a precedent has been set. And so we are on a path in the EU to a United States of Europe. And that may be an overstatement, of course, because you need unanimity. Yesterday I was talking about 28 EU countries. Apparently, the UK is no longer part of it, so it's 27 EU countries these days. But there are 28 parliaments that need to approve it. Notably, the EU Parliament needs to approve it as well. And those guys are miffed because, in part, this deal was made by cutting the EU budget. The EU budget was never that huge to begin with, but in order to sell this at home and whatnot, they cut the EU budget so that they can say that this particular package is bigger. So as you might imagine, a lot of horse trading going on. The broader point is that every state still needs to approve it. There were also things that a lot of people had, just as in the US as common, along the wish list, notably on governments and behavior. A lot of people said, hey, if you're going to spend this money, we got to have some control over how you spend it. And by the way, we don't like the way your government behaves. And particularly Poland and Hungary have been singled out. Well, those were non-starters because both Portugal and Hungary need to approve to the agreement. And so, yes, there are still strings attached. But Italy gets almost a quarter of that money. So, for example, they're quite happy. But again, the opposition Italy, of course, is pointing out that there are strings attached to some of the money. But it's a big spending program. Markets in that context are happy. The both equity and bond markets do express it. The DAX, for example, was up 2% earlier today, and now it's only up about 90 basis points as I speak. Bond market may be more relevant in the short term, that the spreads are narrowing. That means German bonds are selling, and the peripheral bonds in the Eurozone are rising. I'm looking down because I'm looking at my screen. I can put that window a little higher than I don't look in the camera. And so that trend has been ongoing. Obviously, a lot of that was initiated by Lagarde already, by kind of having her version of whatever it takes. By the way, Madame Lagarde last week had said her forecast implies that this package will pass. Now, mind you, the package hasn't passed yet. This has been agreed by the EU leaders. Now it has to be, so to speak, ratified in 27 parliaments or 28 parliaments. And so the expectation is this is going to go through. And also there have been some selling on the news and so forth in recent days because a lot of expectation had been built up. But the huge thing here is that the EU now has the capacity to issue EU-wide debt. They had previously funded various custom vehicles, and those custom vehicles, of course, are powerful as well to do things. But this is the first time real money is spent. And now, of course, the question, how far do 750 billion get you? It's a good chunk of change, but it really depends on how it is deployed. And so we'll have to see that. We see that in the US. If you give hand out checks to people, sure, that's going to increase consumption in the short term, but it's very difficult to kind of have a multiplier effect of that of any sort. All that said, what's happening in the EU, what's happening around the world is that massive fiscal programs are being deployed. And so that's been keeping consumption up, that's been subsidizing markets. And And so the question is what will happen at the other end of this, and will certainly be loaded with more debt. And when it talks about, well, how are we going to get rid of this debt, it turns out we are not going to get rid of this debt. The goal of policymakers is that as a percentage of GDP, this debt is going to shrink as GDP is growing. The challenge, of course, in the developed world is that GDP isn't growing that much to begin with in the best of times, and so getting these ratios down is kind of difficult. Anyway, so let's briefly talk about Judy Sheldon. Judy Sheldon, a Fed nominee of a more vocal type when she is not at the Fed, because she isn't there yet. She is presumably going through the approval process now and may well make it onto the Fed. And she is a bit of an outlier, in part because of her economic views and part of how she's been acting in the blogosphere in public. And the question is, what's going to change when she is on the board? And just as a reminder, decades ago, you did not need to be a PhD economist to be on the Fed. Indeed, Powell isn't a PhD economist, neither was Greenspan, for example, but it used to be business people on the Fed and so forth. So mixing things up a bit with people with different backgrounds is not a bad thing per se, of course. And then the whole point, I suppose, of the nomination is to rock the boat a little bit. Now, Judy Sheldon has been in the news with some things that are a bit controversial in Fed circles, notably toying with the idea of going back to a gold standard. Now, I'm a bit skeptical about her views because she has not been consistent in her views. And one thing she's been criticized for, and I concur with that criticism, she was very much criticizing Fed action during the great financial crisis, and saying, hey, rates don't lower rates as much, rates should be high, and so forth. And now she's egging on the Powell to cut rates more. And so this appears very much as playing favoritism so that she actually makes it to the board, playing into the sort of things that President Trump likes to hear. And so some people have raised concerns whether she's going to be dependent. Also, on the currency front, and as many of you are aware, I'm keenly kind of watching those markets. She appears to be quite willing to have an interventionist approach. And I am more genetically engineered to have market forces dictate rates, not just interest rates, but also currency rates. And so she's a bit all over the place with some of those things. And if her mission in life is to rattle the cage, hey, Godspeed, we be with her. It would be helpful, I think, to see the overarching philosophy and some of what she says. And there, I still have to learn more about her. I'm not going to suggest that she doesn't have one, but at this stage, the focus appears to be more on rattling the cages. And so, when it comes to what you're going to do with China and so forth, it's one thing for politicians to say certain things, but it's another one for Fed officials to say certain things, and so we'll have to see. So she seems to be more in line with endorsing some of the conspiracy theories that are out there about how backroom deals are made and so forth, which in today's world is just much, much more difficult. It used to be that people could come together in Bretton Woods or wherever it may have been and come up with a big deal. Now, is that impossible nowadays? No, it is not. And so having a force like that in the Fed may not be a bad thing to get people out of their comfort zone and think about other things. Because a lot of the times, talking about which, apparently, I didn't read that firsthand, but read about it elsewhere. She also has voiced criticism about FDIC insurance. And the whole issue with the whole purpose of the Fed is to be a backstop to the financial system. That was the original founding. The original founding was to have greater stability and that you don't have a run on the bank. And when push comes to shove in a crisis, everything gets guaranteed by the government, right? You saw that in 2008, FDIC insurance was increased, right? And so similarly now, everybody in the dark has their debt guaranteed, unless you're a consumer. And so pushing back against that a little bit isn't such a bad idea, because the whole, when you talk about, is a bank allowed to do any speculative transaction. Well, the whole point why these things are not allowed, or why there's a pushback against it, while there's a push for the Volcker rule, is because the banks have access to the Fed and to the Fed's balance sheet, and with that have protections that others don't. And so that comes with responsibilities. Now, if you take some of these protections away, you could allow these institutions to engage more in risky behavior. And that's all great in theory. But as we saw in the financial crisis, and I'm here, let me just put out some disclosure here. And since this is a long time ago, I can refer to that. Goldman Sachs became a bank, a commercial bank during the financial crisis, and before that, they were what's called an investment bank. Nowadays, there is no more that distinction, but the whole point of that was that through that, Goldman Sachs had access to the discount window, had access to the Fed's facilities, and so that is most relevant in the crisis. Now, the question is there a model where you can kind of get companies to be less dependent on that? And I think there is. And so are we going to get there? I don't think so. But is it worthwhile to have a voice on the Fed who is lobbying for such things and have such ideas? I don't think that's bad. And so basically, you're putting somebody on the Fed who is going to shake things up a little bit. And we have that, by the way, already. I mean, we have Kashkari on the Fed, and of course, he is in a very different corner. But Kashkari, by all means, is not following. Neil Kashkari is not following traditional Fed mantra. He is somebody who shakes things up a bit. And so, if you have somebody on that end of the spectrum having somebody at the other end of the spectrum, well, so be it, right? It's now herding the cats at the Fed isn't easy and so forth, and there are plenty of challenges. But in any case, I think the Fed as an institution is going to be just fine with having a more diversity of opinions, and so the important thing is that all of this is going to happen in a constructive manner, because a lot of money, I guess, depends on it, trillions and trillions of dollars. So I'm just looking at the market here briefly. I can't help it, I suppose. And I see that gold in particular has been doing well. It's up 1.2%, 22 bucks at 1840. But I should mention that silver has been doing very nicely at 21.12 right now, up 6% for the day, 21 bucks. So silver bugs will love that, will like that. A breakdown, the gold silver ratio has been coming down in recent days. We're not making any investigation on any of this, but it appears that there is a little bit more of a breakout in some of these commodities that have more industrial use, and silver is just a tiny proxy. Obviously, copper and other things have also been doing well. And as I speak now, the bigger, broader story here is that the dollar has been weakening. And if I look at my screen, the one thing I see down is China. And let me just see whether that happened overnight as well. The Chinese market was up 23 basis points, the CSI 300 anyway. There are several different Chinese indices, and they all have their plus and minuses, and of course it all depends on how the new dynamics will play out in the election and whatnot. Anyway, I'll leave it at that. I tried to keep these a little bit shorter than I have in the past, and so let me know about this new format, how you like it. Stay safe out there. And by the way, as you can see, I am in my office today, not working from home. I decided to check out the San Francisco office. We got new rules, new regulations. So just as I'm highly regulated in the financial service industry, our commute life in office will be regulated. So I want to make sure that we do already have some masks here. I've been the only one in the office a few times in recent weeks, and nobody else in my team has been in the office. But we need to put up signs, and that will make us all safer. So if we have up some signs with check marks and check boxes, that will allow others to come back. At this stage, there is really very little appetite of my team to come back on site. I think we're getting used to working abroad, and see that there are many benefits of that. And so if you have an idea of how the new office should look, let me know. I'd be curious. Our lease in this particular space goes until September of next year. So by then we'll have to decide on what sort of space we have and how to mingle and meet and so forth. Anyway, have a great one. Be safe out there. Take care.